Hey everyone, this is Dalton Grados with Grados Capital. Haven't done one of these videos in a while, but every week I do either a written or a video like this, but every week I'm putting out some sort of newsletter, and most of the time I would say it is in written form like this on my Substack. This was last week's newsletter, so go ahead and just make sure to subscribe to that. It's the first link in the description. Totally free. No upsells or anything, just a free market newsletter to help you prep for the week. Usually written here, but today we're doing a video. So let's go ahead first and foremost and draw our levels for the week. So this is sort of my setup here. We're going to expand this daily ES chart, and I've removed all the lines that I had on there to take you through this and draw the levels with me that I normally put out every week. I give you the letters in the newsletter. This week we're going to actually draw them together just to kind of show you the logic behind the levels that we're looking at. And again, we're going to go through some fundamentals that we're looking at this week, but since we're looking at the market ahead on a weekly basis and we're mostly short time frame traders, then we are going to put a primary focus on our technical levels because they do matter and they do guide where our trades will be and where our bias is. So firstly, let's go ahead and look at our upside supports. So we have this level up here, which would be this low that we made, or this lower high that we made on the way down, and that would be sort of our next target on the upside. You see it also coincides with this resistance level here and here, and this resistance turned support here when the market was trading up here. These 5800 levels, 5850, 5835, sort of this area was made into a support and is also resistance here. So maybe we'll draw here another line here to indicate that next level of support. We've got to go over this lower high, higher low, whatever you want to call it here. Okay, now let's go ahead and also, I had this drawn on the screen that we referenced in last week's newsletter, but let me go ahead and draw it again, because we referenced this downtrend line. So if you were reading last week's newsletter, we had this downtrend, and we said the market was no longer in a downtrend. So how we draw a downtrend is we go out and in, and before last week, it was here, right? We were touching, so on the way down, the market touched these levels, right? So we had a downtrend here. The market bottomed here, made a higher low, and then we broke out of the downtrend here. So the market was no longer in a downtrend. And so we reported about that last week. And since then, we have retested the downtrend line and continued on up. So we said last week that basically the market had digested the worst of the tariff news. That was down here, right? So the market sold off on the tariff shock. The market has now digested that news. And so I personally am not bearish until we get more shocking news than that, which absolutely could happen with Trump. There is headline risk. You don't quite know what he's going to do next. So if he does something more shocking to the markets than the initial tariff shock, then I would start to get bearish. But until then, the market has digested the worst of the news. The initial announcement was a big shock. Markets digest that, and then we've also backed off on the tariffs since then. And so the market is looking pretty positive, climbing on up. So now let's identify some of our supports and resistances. So right away, I'm looking at this support here. You see we touched a support here, 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 and here, right around 5,600. And we talked about this level too, if you've been keeping up with the newsletters, how this level was really the area to get over. Once we broke the downtrend here last week, we broke the downtrend. We were seeing, are we going to get over this 5,600 shelf, or are we going to come up, reject, and go back below the downtrend line? As you can see, we accepted above the 5,600 shelf. So any downside, I would really be looking for a retest of this 5,600 area to confirm it as new support. And again, the most bearish scenario would be if we really just slice through it and get a big engulfing candle below it. Otherwise, if we're not below 5,600, I'm going to assume that we're going to keep this area of support stable and then look to the upside at our 5,800s, getting into this lower high. Got it right that time. Lower high area would be our upside target. So really this range, and I know it's a big range, but between 5,600 and 5,800, 5,830s, 5,850s is really where the next big upside resistance would be. So I know that's a big range, but markets have been volatile, right? So when markets are volatile, they move in much larger ranges. And then of course we have the middle of this range would be right around the 5,700s. Now I know these are sounding like big round numbers, and that's kind of the way they play out in the S&P 500 is your big supports and resistance also turn out to be around the big round numbers. And so, that might seem very simple, but that is what it is. We don't have to overcomplicate it. I would also say 5,500 would be a big support if we do get below 5,600. So if we come down below 5,600, we really wouldn't be breaking back into a downtrend again until we get below 5,500, right? So we could break below here, play in this area a little bit, and then really below 5,500 would be the next level to confirm a continuation into downtrend. So right now, my bias is more of a neutral to bullish bias, and I'm really looking for these next upside levels to be tested. Keep in mind, we can also chop around a bit in here. Now, speaking of chopping around, let's go ahead and look at our fundamentals for the week, because this is a Fed week. All right, so Monday, Tuesday, not much this week. Wednesday is our Fed funds rate decision. This is always a big week in the markets. So typically, we chop around up until this announcement on 2 p.m. on Wednesday. Now, the Fed is expected to maintain rates. If we look here, Fed Powell is about to defy Trump and hold rates steady. So Trump has been pressuring Powell to lower rates, but really, until inflation is really showing that it is decreasing, they are going to be holding rates. And so they are overwhelmingly expected to hold rates. And you might see some news articles about Trump pressuring Powell, Trump threatening to fire Powell. And unfortunately, I shouldn't say unfortunately, it's not really one way or the other. It just is what it is. But contrary, I should say, the better term, contrary to those articles you may see, Trump can't really get rid of Powell. The Federal Reserve is a private organization that is totally removed from anything in government. And as Chair Powell says over and over again, they are really apolitical. They are there to do their job to, make monetary policy. So, they're really removed from it. And Fed Powell has not reacted at all to Trump's pressure that he puts on him. So that's all he can really do is put pressure, put headlines out there, try to cause a scene. But Powell's not reacting to it at all, and there's nothing that Trump can really do to remove Powell. So Fed is expected to hold rates steady. We shouldn't get too much surprise in the markets, but it's still Fed funds announcement, and so the markets will tend to be choppy leading up to that announcement. So be prepared for that this week. For earnings, these are organized by market cap, so we really only pay attention to the top couple ones, the biggest companies. This week, Palantir, AMD, Novo Nordisk, Shopify, Enbridge, obviously nothing on Saturday. So no notable earnings this week that will move the market. But if you are invested in any of these stocks, Shopify, Novo Nordisk, Uber, Disney, if you're invested in any of those companies, you might be paying attention to those, but it shouldn't move the market as a whole. All right, now let's go ahead and go into the intraday levels. So at this point, I've given you my weekly prep. All right, this would be what I'm paying attention to for the week. Now for the day, let's go ahead and look at our intraday charts and see what levels we're going to be looking at heading into today. So right now I see right away that the market is pretty much in the middle of a range. So I'm not going to be looking to take any trades off the open. I'm going to be looking for the market to play around a bit and establish what it's going to do for the day. Again, with the context that it's a Fed week, and so the market could just be really choppy for the next couple days, Monday, Tuesday, up until that 2 p.m. Wednesday announcement. But I would be looking for, if we have an obvious support right around 56.50, maybe the overnight lows would be around 56.55, 54.50. So basically a break of range from the overnight highs and lows. I could be looking for a potential trade there. Just simple supports and resistances. If we break above this 56.80, which would be the overnight high, then we should target 5,700. That would be a trade that I'd be looking for intraday. If we break below the overnight lows, we'll see what's below us. Well, it would be these next supports and resistances here around the 30s. And then down here at our big 5,600 level that we identified on the larger daily chart. So that's it. Those are just some simple levels I'm looking at there. Just simple supports and resistances for the day. So again, this is Dalton Grados with Grados Capital. I hope you've enjoyed this weekly market prep, and go ahead and subscribe to the YouTube channel. And as you may have seen, I haven't really posted a video in a while, so make sure you do subscribe to that weekly email newsletter, link in the description, and that will just deliver to your email inbox every week, whether it's a video or written format. I'll see you guys next time.